Ever imagine you're driving through a massive storm in the dead of night, desperately trying to tune an old car radio to find a weather broadcast? You know the feeling, right? Most of what you get is just static. It's loud, it's aggressive, and it's chaotic noise. But if you dial it in just right, suddenly, boom, a clear, calm voice cuts through, telling you exactly what's up ahead. Well, welcome to this explainer. Today, we're going to take all that static of daily crypto hype and tune it straight into the clear, actionable signal of a professional trader. We're looking at a huge milestone in the crypto trader curriculum, day 24. This is it. This is the exact moment in your trading journey where you stop reacting to every single random flash of lightning and you start methodically studying the actual environment around you.
So here's a very serious question for you. How do you actually survive the relentless 24/7 crypto news cycle? I mean, if you spent any time at all in this space, you know there's just an absolute flood of information hitting you constantly. Every single minute, there's a new headline, some new panic, or some crazy promise of endless wealth. And let's be real, if you try to trade based on every piece of news you see across your feed, you are going to get completely washed out, no question. So how do we effectively filter out that noise? How do we build a system that literally protects our portfolio from our own panic?
Well, here is our Day 24 study guide. Number 1, the big picture, macro. Number 2, decoding market sentiment. And number 3, information versus hype.
Okay, let's dive into this. Section 1, the big picture, macro.
When you reach day 24 as a trader, you start to realize something pretty profound. Staring at 1-minute charts for a single digital asset, that is literally like examining a single leaf while completely ignoring the massive forest fire roaring toward you. You have to zoom out. That forest fire is what our source material calls macro news. Now, these aren't just random posts from some developer at 2 in the morning. We're talking about broad economic events and massive global headlines. Think along the lines of a sudden interest rate hike by a central bank. These are the huge systemic shifts that impact all financial markets, which inevitably cascade right down into the crypto ecosystem. A day 24 trader absolutely must study this level first, because macro news dictates the overarching gravity of the market. And, as we all know, you simply can't fight gravity.
It's honestly fascinating to see how that macro gravity affects the ecosystem internally. When we look at Bitcoin dominance, we're basically tracking this massive slice of market share versus the entire rest of the crypto market combined. Now, you might be wondering, why do we even study this ratio? Well, because when major macro news hits, we have to watch exactly how it impacts where the money flows. Think about it. Does capital flee from smaller, riskier projects and run straight to Bitcoin for safety during a global crisis? Or does macro confidence cause capital to flow out of Bitcoin and flood into the rest of the market? This metric right here tells you the true story of where the money is actually moving, totally stripped of all the noise.
And this brilliantly illustrates exactly what the data reveals here, which is equally compelling. The source material points out 2 massive institutional drivers that we have to be monitoring constantly: ETF effects and regulatory developments. Just think back for a second to the massive price swings triggered by historical ETF rumors, or whenever a brand new framework for regulatory development gets announced. Look, these aren't just rumors on some obscure message board. These are verifiable, concrete events that create massive ripples across the entire crypto landscape. Basically, these are the macro headlines that institutional money actually cares about, which means they are exactly the headlines you need to care about too.
All right, moving on to Section 2, decoding market sentiment. So if macro news is the gravity of the market sentiment is for sure the weather. Our source defines market sentiment as the overall attitude, psychology, and feeling of investors toward the market. This is an absolutely crucial metric to study. Why? Because at the end of the day, human beings are incredibly emotional creatures. And hey, markets are entirely made up of human beings. You could have the absolute best macro data in the world, but if the broader emotional current driving price action is steeped in extreme fear or extreme greed, the market is going to behave completely unpredictably. You absolutely have to know what the crowd is feeling if you want to have any shot at anticipating their next move.
Now, zooming in a bit further, we hit a very specific and honestly highly volatile subset of this psychology: social sentiment. If overall market sentiment is the climate, well, social sentiment is the loud, chaotic, daily thunderstorm of social media. It represents the micro-level counterpart to that broader market psychology. This is where a single trending hashtag or, a completely misinterpreted meme can induce widespread, absolute panic. But here's the thing. We study social sentiment not to just blindly follow the crowd. No, we study it to measure exactly how irrational the internet is acting on any given day. Basically, you don't jump into the thunderstorm, you just use it to measure how hard it's raining.
Now let's bring it all together. Section 3, information versus hype.
So the crucial point is, how do you actually divide these inputs in your own mind?
You have to learn to balance the heavy anchor of verifiable information against the chaotic tornado of hype. That anchor is made up of the macro news, the hard data on Bitcoin dominance, the realities of ETFs, and concrete regulations. That right there is the structural reality of the market. The tornado, on the other hand, is the unverified social sentiment. It's the noise, the panic, the intense fear of missing out. The amateur trader, they live entirely inside that tornado, trading purely on hype. But the Day 24 trader survives and actually thrives by dropping the anchor, using verifiable information to stay completely grounded while the noise just blows right past them.
Ultimately, it all boils down to this incredibly direct quote from the source. Learn to distinguish information from hype. Sounds super simple, right? But man, when the market is swinging wildly and the entire internet is screaming at you to act immediately, it is truly one of the hardest things in the world to do. But this is the vital takeaway. This is the whole entire purpose of studying the macro factors and the sentiment indicators. It's so that when the storm actually hits, you are perfectly tuned into the clear signal and totally unbothered by the static.
So, as we wrap up this explainer, I want you to ask yourself honestly, are you trading on real data or are you just following the crowd? The next time a sudden crypto headline makes you want to hit that panic sell button, just stop, take a breath, ask yourself, is this gravity or is it just weather? Mastering that difference isn't just a requirement for a study guide, it is quite literally the key to your long-term survival in this market. Keep studying, keep filtering out that noise, and I'll catch you next time.